say that I'm, dragging a little bit more without the added boost, it's the process of getting used to it. It could have been what?
Could have been better earlier.
No. It's just like right about this time of day. It happens. Hey, welcome to the Closing Beat, everybody. How you doing today? Happy Thursday. Hope all is well out there. I was at the doctor the other day, and they told me I was slightly overweight for my height and weight. I'm like, well, then everybody must be overweight. I'm like, how is that? I don't understand that. How could I possibly be overweight? So, water. Water in the red Solo cup. That way I can make some room for wine and wealth tonight, because every Thursday we do a class for clients, and usually it's wine and wealth or whiskey and wealth, and I don't know. We'll throw it up in the air, see what's going to be tonight, but we'll be over in the speakeasy there. If you are one of our clients tonight, we're going to talk about the sort of a checklist of how to handle your dough in the preparation or in event of a correction, recession, downturn in the economy and the stock market in general. So we're going to go over that. We have lots of great classes in there and already off to a good start this year. I would ask you, what is your advisor doing? Have they already done 4 classes, 2 different articles, 3 different articles in the portal there that are handwritten and not just like taken from some service or whatever? So we're having a good time with it. We'll have a good time with that here tonight. Also, for our clients, starting after tomorrow, we will be forcing the 2-factor authentication in your account so we can then include statements and things that need to be more secure. So you'll be directed tomorrow, anytime after tomorrow. If you try to log in, it'll take you right there and say, hey, just, let's do the 2-factor. You could do your cell phone. You could do the Google Authenticator, and the Google Authenticator is preferred. It's a little bit better. But you could do that if you like, and that is all set up and ready to go. You could do that ahead of time if you want, but we will start requiring that as of tomorrow. And also, starting tomorrow, I believe, All That Jazz is going to be up and running. So if you are one of those that says, I have no idea what to do with my 401k, I don't know what to do with my TSP, I don't know what to do with my HSA, I can't give it to Jazz, but I need the help. Well, now we'll be able to directly connect to it and actually manage those accounts for you. So looking forward to that. We can keep all your dough straight. That is the goal. But you're here to talk about the stock market today. And what have we been talking about? That the area in the stock market here, which is, by the way, is doing exactly what it should. There's no nothing odd about what's happening here, especially going into Friday's jobs numbers. You need more information. We talked about this yesterday. The stock market had no good reason to continue higher. It had today it had some good reason to go lower, but other than that, what's the reason that we would continue moving higher? We reached that point where we've exhausted our energy, and we either need to see a little bit of a pullback, either a little bit of chopping back and forth where there's no progress made in order to continue higher. And so if you look at, this is the S&P, if you look at from the low that was set on January 27th to this most recent high, the stock market was up just over 6%. So a decent little rally off of lows there, but all in one shot, right? The stock market doesn't do that. There was a Russian leader back in the day that said something like, there can be nothing that happens for decades, and then there can be decades that happen in a week. And that's kind of what we've been seeing. Like lots of stuff that normally takes forever to happen, just in a couple days, just happening there. Anyways, I got a fun little thing for you here today. Since the January 27th low, Google, Apple, Tesla, Microsoft, and Amazon are responsible for 1/3 of these gains. In other words, if those 5 stocks did not participate, we would have 1/3 less gains than we currently have. Let's hop over here and take a look. Here is the top 20 contributors to the gains, right? So, in other words, Apple, there's a stock name, in the tech sector there, as many of them are, has contributed 0.66% to this 6% rally, right? So you can see real quick, it's over 10% of the entire rally has come from just Apple. You could look down the list. We got Adobe, AMD, Amazon, Broadcom, Berkshire, Facebook, Google, the rest. As you work your way down the list, the top 20 stocks here account for over half of the gains in the entire rally. Just 20 stocks in the S&P 500. Just these 20 give you more of over half of the gains there. The entire rest of the S&P accounts for less than half, and we put a little fancy chart so you could see. 55.6% of the gains from the January low to the 6% rally that we had came from these 20 stocks. The rest, the 480 stocks really, contributed only 44% of the entire rally. That's pretty interesting, right? Because you have, and we'll cover this in a second, you have basically the tech stocks that took their hit and a couple others being the ones that gave you the lift higher, right? What happens if those, like today, we saw what happened. Amazon really kind of took a beating there overall, right? Netflix still down a little bit. You got the rest of these taking a break. Really only Alphabet was the one to say, we're going this way, for the time being anyways. And so when those decide they're going to take a break, these top 20 contributors, they're the ones that are the most extended. They're the ones that had the biggest run, right? They pulled the market up, really. And so they're going to be the ones that bring the markets down. I would say Meta as well, or Facebook in there as well. And we'll come back to Facebook in a second, but we'll also look at by sector. Since that January 27th low, which sector has accounted for the most amount of the gain there, over 2% of the gains? That'd be the tech sector right there, and you know why now. It's just your Apple and Amazon, or no, sorry, Apple, Amazon, and others. That's the biggest sector to give you the gains there. So the tech sector took the biggest hit, which means it was the most extended, and it gave you the biggest rally. So all of that, right, coming back over here real quick, all of that to say they did the heavy lifting, now they need more information. What information are they going to get? Are they going to find out that interest rates aren't going to go up? Probably not. Are they going to find out that inflation's going down? Probably not a lot. Are they going to find out that all of a sudden everybody wants a job out there? Apparently not. That's what they're telling you in Washington right now. So there's just as much good news as bad news, and then if you throw the Ukraine thing in there, all right, that's pretty bad news. And so the market has no reason to be overly bullish or overly bearish at the moment. That can change on a dime. It usually does. But for the moment, that's where we stand. And so today, the stock market was largely moving around based on individual news. It's earnings season. We're just over halfway through earnings season, and stocks that are reporting get the attention. You saw it. It was like Facebook all day. It's all anybody want to talk about until we got to after hours here. So Facebook all day. Oh my God, what's going on over there? Is that a buy? Is it a hold? Is it a runaway and never come back? What is it? PayPal, oh my God, making new lows. Netflix selling off. So that was the focus. Individual stocks today. Speaking of Facebook, if we're staying here with the S&P, you might have saw what happened today. I don't know. You see a headline or something like that. The gap down today in Facebook accounted for over 0.5% of today's S&P losses. So we go back to this screen over here. You can see the S&P down let's call it 2.5%. Well, that 0.5%, that was all Facebook, and it's because it's that heavily weighted there. The company, a couple fascinating facts. I think I saw this on Bloomberg. This drop here today accounts for the biggest loss in value of any stock in the S&P ever in history. No other stock has lost this much in value in one single day. $226 or $227 billion all in one day. You might have seen that Facebook was down 26%, and whew, that's a nasty day there. Now, I should mention, you would think, oh, Amazon, Snapchat, and the others would be down after hours. They were not. We'll come back to that in a minute, but they were actually higher. One other thing here, if you look at Berkshire Hathaway, we'll do the B-class shares there. Berkshire Hathaway now is more valuable than Facebook there. Berkshire Hathaway is at $700 billion. Facebook is under $700 billion. Facebook lost 6th place as the 6th most valuable company in the S&P 500 to Berkshire Hathaway there, which, by the way, beat out NVIDIA at the end of last year. So they're on a bit of a run themselves there. Not too bad. All right, if you're looking through the S&P here today, some other names that might stick out to you, you've got DXC Technology. So I tried a couple things today. I didn't get a lot of orders filled. I didn't try my hardest, I guess. But DXC higher, good momentum there after their earnings announcement. T-Mobile, I tried to put on a position here, did not. Oh, I did get filled. Sold the 110 put, which we'll cover in our research class there. And that might be about it. Come back to some of the others there. You got Humana. There's no real play here. I liked Humana. I was trying to find something to do there. There was no real activity happening there, but you notice that one was stronger today. Allstate, where'd it go? Allstate with a nice reversal off the 50-day moving average there. We own it. We're happy to see that. Hershey, we own it. Happy to see another great day for Hershey. Very defensive type stock there. Kroger moving higher, almost above the 50-day moving average, and United Healthcare to stay with the healthcare area, which, by the way, I'll go back to this guy. There you go. Healthcare, one of the leaders in this most recent rally, and a way to look at that without moving. I'm sorry, I'm bouncing around on you. But look at healthcare. Most recent rally here, really not letting up any steam. It barely lost anything today. So if you had a sector that lost more than the markets today, that tells you that sector is pretty weak. I think well, naturally this one's going to be down because of earnings, but communication services, there's real weakness there. Granted, it's being weighted just a little bit. Semiconductors, same thing. Consumer discretionary, which is also affected by earnings, but look at retail, right? So a lot of these areas you can look and go, I don't know. I'm going to be careful here. This is something maybe I'm not too sure about. If you look at the NASDAQ, so that was your biggest seller today. You could probably imagine why if you hadn't seen what happened in Facebook there. Was down quite a bit during the day. It started to recover a little bit. That's going to be due to a couple earnings coming out. You got Amazon. It is, so it was down 7% on the day. We're trading out here about 32.50 all the way up here. Wow, actually, so I didn't get a chance to look through that there, but looks like they had a bigger holiday season than expected based on the initial kind of preview of these numbers I'm looking at. Beat on earnings by a mile. Good for them. I wonder how much of that was because of Rivian. Do I have that data here? I won't waste your time, but I'm going to bet you, because it was just a little bit in Amazon AWS there, so I'll bet you there's some Rivian money in there somewhere. Something happened there. So we'll talk about that maybe tomorrow when we get into what happened with Amazon. I will dive through it for you. But anyways, if you look at the NASDAQ, nice little recovery after hours here is trying to get a little support from Amazon and is getting support from Amazon. Elsewhere in the NASDAQ, you should be ready for this, T-Mobile. I mentioned this already. I did get that. So T-Mobile, the biggest gainer in the NASDAQ here today. A couple others that stick out. IDEX. Nothing crazy. Just, hey, it looks like it's trying to put in a bottom there. You like that it's strong today when the market was weak. Kind of interesting. Charter is a tough one to pick the bottom on, but looking better than it has in the past. That's my way of saying I don't really know, but looks a little bit better than it did. And I think Mondelez finished, it gained 4 cents on the day. So they're bringing back, or they reported their dividend here. They got earnings and everything was fine there with them. Oreos are flying off the shelves. Everything is good there. They expect a lot of activity over Valentine's, which, good for them. Okay, so looking elsewhere, what do we got? We got the Dow down just a little bit on the day. It's a decision area, right? Or what are we doing? Are we going higher or lower? It's like the glass is half empty or full. We could debate all day whether we're going higher or lower. I don't know what happens. We got the Russell not looking good, right? So the Russell in general looking pretty weak. I had sold some calls on the Russell yesterday just to try to balance out a little bit, so I'm not all long. We talked about that, and no, just not participating at all, and also no real attempt at a bounce. All day, just smashed down near those lows. The pressure was intense there on the Russell. A couple other things. You got crude oil hitting new highs today. 2% on the day. Looks like it's headed for $100. I mean, what's going to stop it now? Especially with more potential problems there in the old Ukraine and with what's going on with Russia. I'd also say the VIX. There you go. So the VIX down a little bit, and after hours, I think it's changed just a touch, just down a little bit more. My data is not actually accurate. Something's a little off there because that's not giving me the right number. So we'll move on from that one. As far as office trades, the first video, which is an overview of the sort of platform, we did that yesterday with Cody. I'm going to do it again with Charlie, so it'll be pretty much the same thing. There may be some different questions in there. We'll go over everything. Also, we'll give you a update of what we've done. But that is all fired up. That worked out great. So if you want to be a part of that, we're doing the full transparent trading, having a great time, just see what happens. We are not one of those that says like, oh my God, you got to pay us thousands of dollars. It is actually free for clients, and if you're not a client, don't want to be a client, or you just have no interest, that's cool. It's $13 a month if you want to join us there. And like I said, for better or worse, you're going to get to see everything. No, everybody does that. They're like, oh, I made a ton of money on this stock because I bought it. I'm like, where were you? Give a little heads up next time, right? How much money is a little bit of money? Like, did you make a lot? Let's see. What'd you do? So we're going to show all of that. As far as other positions, before I move on, like I said, I tried a few things, and I got busy and was doing my real job. McCormick, I was trying to sell. I did not get filled. Nope. So I was trying to short that one, essentially. At JP Morgan, I was trying to get out of that play. We had about 56% of the total profit there. and the order did not get filled. I'll try again tomorrow if that wants to stay with us there. That's our biggest gainer at the moment. And then Solar Edge sold the 170 puts on that one just to give it a shot. And Facebook, how could you not, right? You got to take a shot on something here. The biggest move ever in history? Come on. So sold, I wimped out a little bit. I sold the $200 puts largely because I have a lot of long positions. I'll explain that in the class as we go, specifically to explain why I chose that and how that fits into our, I think I'm going to call it a battleship, actually. I think that's what I'm going to call it, our cruise ship. Anyways, new highs and lows for the day. 29 new highs, 6 new lows. You could probably guess a couple of these, right? Facebook's one of them. PayPal hit new lows ever so slightly. Compared to yesterday's move, 6% doesn't seem all that scary. It is extremely extended down here, so I can't fault anybody for taking a shot. Honeywell also hit new lows, and that's working on it. What I don't like about, so this is the first move, and I don't like to try to be a counter trend trader, or I don't like to add to our portfolios here at Jazz on the very first day of a down move. Number two, I also don't like when it sells off and you're looking at it and you're saying, okay, I'm interested. I want to do something. I do not like when it refuses to come off lows. You see that all day? So all day it just sold and sold and sold. No buying. All the way down at lows, getting lower and lower and lower and lower. Finishes the day at lows. No attempt at buying. That's because people broadly know you don't try to buy the very first day of a down move, especially a big down move there. So I live by that rule myself, and that was one of the new lows. I talked about McKesson. I said McCormick. This is McKesson. That made new highs today. Just thought that was interesting. Hershey, we own, made new highs. That was really cool. Like to see that. I already talked about that. And Raytheon is that breakout from the other day. Just continuing strong on an otherwise down day in the market. A little bit of defensive play here. And clear skies ahead. So, I don't know. Let's see what happens there. Just a fun one to point out. Stocks in the news. First of all, you got Spotify. That was another one that made a new low today. Earnings came in basically as expected. There was a 2% beat in average revenue per user. Good for them there. They guided weak going forward. Monthly active users also missed when they guided for that going forward. So did paid active users. They break it down in those categories, so I'm just doing that. The biggest issue I think that was frustrating for people is that they stopped offering annual guidance. So they were just talking about next quarter. They would not talk about forward guidance there. So a little bit tough for them. Facebook, you probably know already, they had some issues with users as well. They missed on daily active users, monthly active users. They guided for the next this quarter 7% lower because of advertising costs, as thanks to the change in the Apple iOS system there that hurt them. Said that their quote was that it reduced ad targeting performance and increased competition. So it's a good thing. I mean, if you're out there trying to advertise, that you don't only have to go to Facebook, but it did hurt them. That was one of them there. And also they're spending 9% more than expected. Yes, 9%. So not much more to say there. You could just, gang up on them and say it was horrible, but there's a lot there, right? There's a lot of shift to, well, now we know, Snapchat. You saw that after hours. There's a lot of shift towards TikTok, and so those eyeballs going elsewhere there, that is starting to show up in their, what do they call it, time on the screen or something like that. So there's a lot less time on the screen. So not good. QCOM beat on earnings, 8% better than expected. Revenue 2.5% better than expected. They guided 20% better than expected, and the stock goes lower there. It was lower after hours yesterday. They said demand is accelerating across all of their businesses, and they see improving, quote, improving chip supplies with strong demand from all of their smartphone makers. Is that a buy? Right? So is this a discount? I think you got to give it some time. With overall market weakness there, gotta be careful. T-Mobile, this was earnings as well, slightly better on their net paid additions is the wording that they used for that there. Revenue missed a little bit, but they guided stronger thanks to higher revenue per user overall. And they talk about, it's kind of like Netflix, they talk about the churn rate, right? How many people joined T-Mobile or one of their providers and then said, no, I'm going to go to AT&T or I'm going to go over to somebody else. So a much lower churn rate there, which is good news when you're making more money off those people that are then staying on your platform. Of course, that's good. And one that's going to throw you for a little bit of a loop. We'll go over here. That One Main Financial. I like to look at them. So it didn't do a whole lot here today, but this is not a good sign. One main financial is they're the subprime lender for mortgages, right? So less than stellar credit, maybe borderline. Other lenders won't take you. These are the guys that do this. I think you got to keep an eye here because they had seen consistent, sharp declines in their total delinquents, meaning people that are behind on their payments. They call them delinquents. So quarter after quarter, you just look at it. Okay, less people are delinquent because, well, there was a lot of money being handed out there. Now, the number of people that are less than 90 days delinquent has gone up a quarter over quarter, and the same year over year, so also up a quarter point. Those that are more than 90 days delinquent on their payments is up just about 5% quarter over quarter, 0.5%, I'm sorry, I said 5. Up about 0.5% quarter over quarter and about 1/4% year over year. Total charge-offs, meaning they've given up, you're not paying, they're just going to eat the bill and move on, up almost 0.75%. That's a big deal when you're talking a lot of money, right? You know how that goes. Other than that, you've got Bank of England, which is like their version of the Fed. They raised rates 0.25%, and the ECB, which is the same thing, just over there for same as the Fed, they kept rates the same actually. So they are going to also stop their, they call them emergency bond purchases. They're going to stop that in March, just like the Fed is going to do. Other than that, I think that's pretty much it. I'll take your questions if you have any there, and then I'll get ready for our class tonight while we set this up. Did I mention everything adjustments today? We did the Facebook. I tried to do something on EA. I did not get filled on EA. I did not get filled on our JP Morgan to close that position, and I did not get filled on McCormick, MKC, not McKesson, like I said earlier. Yep, I like it. What are we talking about? Talking about the kids investing there? It's the number one thing I hear. Yeah, that's the number one thing I hear. People want to start early. You try to push your kids to start early, and then they get older, and they're just, man, I should have started earlier, and then they try to push their kids. Something in the water. I don't know. Yeah. You guys not happy with Edward Jones? What'd they do to you? I don't know. I missed it. I love it. Any thoughts on Ford's miss? Either way, right? When you look at Ford, how high was it going to go? Like this, what I was saying at the other, I said it in here, and I was wrong by however many percent that is, because it still went up there. But how do you justify a $20 price tag on Ford right now? Like, you could have every belief that they will just execute perfectly on everything they're going to do, and every reservation for the Ford Lightning is going to go through, and they're going to buy it. It's going to be great. Well, that's a great example of how a stock, the emotion of investing in a stock can get the best of you, and really is. It's trading down, what about $19, just under $19, $18.80 or so, right here at these prior lows. And to be honest, until this starts to, this big vision that they have just like General Motors, until the big vision starts to show any sign of success, you got to be a little bit skeptical. You could dabble, but I actually am not surprised there. Yeah. Is Facebook done? No, they're not done. They're not done. What is your watch list? I don't really have a watch list to offer. I would say, I guess, if anything, those ones from earlier, the McCormick and I got Solar Edge, but McCormick and EA, I guess, for the moment. I don't really keep a watch list, though. The way we're going to do the show, it'll be live. We're actually working on a filter so that you don't get a million emails. Like every day you get an email. We're going live. But the way it'll be done is whatever happens during that time is what we're going to do. So I'm not going to start ahead of time and be like, oh, I had to do this. And, sorry, guys. I'm just going to do it right in front of you. So then the next day, whatever changes we make will happen right then at that time. So it's, no pressure, right? Talking about Roths with kids with no provable, careful there. A couple years ago, the IRS really started cracking down on that. Now their focus is more, they'll still inquire and stuff, but their focus is really on the crypto space where they're putting a lot of their efforts. So you really want to be careful there. Know what you have, know when you bought it, and know when you sold it, and your cost basis, of course. Was hoping Costco to go lower to buy more. I saw a lot of talk of big option buyers there. Maybe it was Pelosi. I don't know. But stock didn't really move today, but there was a lot of comments on someone loading up on some options. I didn't catch which ones they were personally, but let's see if I can see anything. No, I don't really see anything here. Oh, 525 calls and 510 puts out in March. Huge volume there. 525 calls, you had a bunch of money trading there. It could just be covered calls, though. You don't know. What are we looking at? Did Amazon just save them maybe for tomorrow anyways? Yeah. I love it. The week could be over. I think Facebook's going to plummet another 50% more. I think there's a lot of people that would like that to happen, but about 50%. We have to absorb the fact, just like Amazon did all those years, it's time to absorb the fact that they've made their decision. They are spending money on the metaverse. That would be life-changing. We know the odds are stacked against them, but that's where they're choosing to spend the money right now, and hopefully it plays out. Yeah. I see you guys getting a little clever with what you think you can get away with with the IRS there. You got to be very clear. I've had at least a dozen clients go through those issues where they go, my child really works for you. And you're like, they're 4. What are they doing? It's careful. I have a client that has a child that's basically an infant that does some modeling, I guess, for baby foods. And they use that baby. Well, now that's legitimate, right? I mean, that's verifiable. Yep. Harry, could we see Facebook transition from a growth company to a value company as Cisco did back in the day? I think Facebook would very much disagree with that. I think they see themselves as world-changing, constantly in a growth mode, obviously with how much they're willing to reinvest. So I don't know if that happens, but I think if we were to ask Facebook, they would say, no, not at all. No. You see the Russell bouncing soon. I would like to see it get a little more extended. So I like that it was weaker today, but we'll see. No show tomorrow. Best snow story. I don't have a snow story. It all went perfectly well. They're banning the truckers. I saw they're getting banned left and right up there. The truckers in Canada that have had enough. Started a movement. Any thoughts on PayPal and Facebook? Yeah, we covered those earlier. Yeah. What's your macroeconomic outlook for the year regarding guidance? I'm not an analyst, so I don't do that. I'd be lying to you if I tried to come up with something. I really don't. I don't look at it that way. So I'm very much a money movement kind of guy. What are other people interested in, and follow it first, and then do the research from there. So I won't come up with an opinion first of all. And you'll learn a lot of that in the class. So a lot of what we do with the short-term trading, it's exactly the same for what we do with the investing in terms of all the data points. So you'll kind of learn like how a lot of it's not about what position you pick. You can have a bias, but it's more about how you're filling the ship, right? Or how you're carrying everything together as one. I'm hoping I come up with better ways to explain that. Yep. USA truckers. Oh, is that happening here in the States too? I gotta get cable again, man. I haven't watched TV in forever. Yep. Gonna open a new client support 2025. Hopefully sooner. We'll have more clarity tomorrow, whether the answer is yes or no. I love it. Why doesn't YouTube have a decent reply? Yeah, ask them that. And they should do it where we can all, like, if you want to be there and visibly watch, we should all be able to see each other. What's wrong with that? I get it's a lot of data, but I think it'd be cool if it was like a stadium filled with people and you could just like see the questions and stuff, and you're there with your webcam. I hate that I'm the one just talking. I can't see you guys. You can't talk. We would do questions where you could just like have a question and answer thing. That'd be cool. Yeah. I love it, man. Well, that is it. They tell me I got to get ready for our show here tonight, and we're going to be doing a specific checklist. So go through line by line. What's most important when the market's volatile, the economy's going through a recession, whatever? How do you go through your dollars to make sure you don't get yourself in any damn trouble? Because we don't want that. Enjoy the rest of your day, and we will see you soon. Enjoy.